you saw TCS drop in trade yesterday, dropped over 4%, not something that you see every day. And you also saw quite a momentous decision by the BOJ. Now, the question we're asking is about the broader IT space, whether this pullback indicates anything or should require you to examine the bull run. Oh, wait, am I confused? Is it the bull run or the bear case? Which is it?
So you could argue a bit of both, Alex. Yeah. Why do I say this? Because while IT has been under a bit of a cloud and every attempted pullback has been sold into, maybe for the right reasons, it still trades at a premium to the Nifty. And every single, there is a Jeffries note that came in December, which spoke about how every single time that the Nifty IT is traded a premium of over 25%, 30% to the Nifty, it has underperformed in the subsequent 12 months or thereabouts, something like that. Now, here's the case. I mean, the key points. So if there are potential delays in the US rate cut cycle, something that we spoke about in the trade setup again today, right? That impacts the re-rating of the valuations. People have been betting on rate cuts coming in, IT pack across the world moving up, IT services in India moving up. That gets delayed, the valuation re-rating, if there are potential
assuming, to make that a complete conversation, assuming that somebody has not heard that piece, what was said in the trade setup on rate cuts?
No, just that so we were arguing about whether the chance of a rate cut comment from the Fed
today
gets nullified.
Right.
Simply because there might be a year, 2024 might well turn out to be a year of no rate cuts as well. People are talking about that. So therefore, if rate cuts are delayed or postponed for 2024, that makes the case of valuation re-rating for IT across the world and IT services in India a bit futile. Emphasis CFO, and we highlighted this yesterday in a conference to Citi or otherwise, but to Citigroup mentioned that there is no change in the demand environment since the start of the quarter. So however we talk about idiosyncratic wins for companies, there's no change in the broader demand environment.
Like the TCS win.
Like the TCS win today, but that's very, very specific. Otherwise, there's no change out there. There is lack of clarity about Indian IT companies' ability to mine the AI opportunity. And one of my fellow co-anchors has been very anal about it, that where is it that the AI is happening? Read Tamanna. Lastly, valuations are still trading at a premium. And I'll get into the valuation argument, but valuations are still trading at a premium to historical averages as well. I'll get into that as well. The other piece is currency moves, Alex. The argument is, can currency moves and the typical 4% average CAGR INR depreciation, is that questionable for the rest of the decade? And nobody has the answer to this, but I'm just making a point out here. 2 points. The BOJ policy normalization, while thus far, as Samina said, hasn't had the resultant impact on the yen-dollar equation thus far, right? In fact, the yen did weaken as opposed to strengthen.
Yes.
But could it strengthen over the case? And could the dollar largely weaken? And if indeed the dollar were to weaken against a basket of currencies, including INR, and again I repeat, there is no way to predict this because it's very difficult. Most people fail.
Yeah.
But if an assumption is made that because of India's current account deficit being a lot better than the past, and if indeed some moves like this weaken the dollar in general against a basket of currencies, and therefore, if the INR depreciation is not 4% but 2%, that's a quote-unquote net negative for IT services as well.
Perhaps it's a separate conversation, but I would argue that it is contingent on the rate decision and the rate move by the Fed, because in a situation where the Bank of Japan has raised interest rates, you still have the 10-year treasury trading at 4.3%. So the gap between the yields in Japan and in the US are not small.
But even if that is an imponderable on the global basket, the Indian CAD numbers are here to be seen. And if those are narrowed, then likely that the pace of depreciation might be slower.
So what's the conclusion of this conversation?
No, there's no conclusion. I just stop. Okay, here's the deal. Just the valuation, and then I'll come to the conclusion. The valuations piece, right? Nifty IT is trading at a 25% premium to the Nifty 5-year to the Nifty versus a 5-year average premium of 18%.
Okay.
So Nifty is still at a premium versus the Nifty valuation wise. Okay, one. Valuations are still above the 10-year average levels for most companies. Most companies, the 10-year averages are way lower than what the current valuations are, despite the fact that the sector has virtually gone nowhere.
Yes.
Part 2 of my question. Forget ER&D, that's separate. But otherwise, IT services, they are trading at a premium. And the mid-sized IT firms are trading at a 20% premium over the large-sized IT firms. So where the order flows are coming in thick and fast, the stocks are already trading at a premium. How do you account for more premium there?
So that's a strong argument against.
That's an argument too, right? And The only things that I thought could thwart this bearish case for IT, and Vikas Khemani was making this point, Pankaj Munarka was making this point, that they are constructive on IT because a stronger US economy may prompt companies to start spending on tech. Now, if they do, when they do, we'll know in the order flow.
Because they can't differ as they have for very long.
Spend. This is critical spend. But I mean, we'll know when they do it. So why try to preempt when they do it? Let them do it. You buy it 10% higher, but at least you're buying an uptrend as opposed to trying to, think of what will happen and buy it. And the defensive bent of the market, if the market were to correct at large and mass, then IT is a safe haven, quality companies, cash flow companies, dividend paying companies, lower equity companies, every year they do a buyback. You might want to hide in those. So that might thwart the bearish case, but otherwise, there's certainly no bull case to be made.
All right, and there you have it. So I don't think a lot of people have paid attention to the valuation premium to the Nifty 50. So maybe that, despite the fact that you have a bit of a crack in TCS yesterday, right? So that's something to consider. And I think Niraj's point is well made, but what do you think about it? Are you buying IT companies? And would you buy at this level with TCS down over 4%? Let us know in the comment section and do stay tuned.